Hello, everybody. We are about to start here. 1 second to go. Here we go. Very good. So as we begin, as I get the right set of slides to begin, I would like you guys, if that's okay, to say a quick hi, to write a quick hi in the comments box, a quick hello, quick yes, just to confirm that you hear my voice. So that way I would have a confirmation that technology is on our side. We hear each other. We are well connected, so we can begin to this. It would be very good if you could just on the comment box. Today, as you probably know, because I'm sure you are here because you have been consulting our schedule. So as you probably know, today is a short-term session. We're going to be doing our AutoUFOs get-together short-term session. We're going to be looking at our GT picks, okay? GT picks, GT for get-together. And picks, well, because, you know, this session is about using the tools. Markets are open. The US market, the equity market is about to open in 30 minutes as well. So hopefully we'll be able to identify all those different trading opportunities and take advantage of them. So that's the plan for today. Okay, and thank you for your confirmations as well. I can see you guys are connected, so it's all good. Okay, so let's begin. Let's begin our day. Okay, and as always, a quick reminder of our disclaimer. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Here we go. So 15th of January 2018, my name is Jose Blasco. I'll be your guide during today's session. A pleasure to be here with you guys. And again, today is about short term. Okay. This is a TradeStation. Okay. Right now I'm sharing my TradeStation screen with you. Since we are going to be trading for short-term purposes, we're going to be attempting to catch market movements, which are intraday market movements, and profit from them to the upside and to the short side. Then we're going to be using lower time frames. Also, because we are movements, which are intraday trades, we want to use markets that are very liquid, and therefore we're going to be focusing today on forex markets and futures markets. We will start with the futures. Okay, what you can see in front of us on your screen is the S&P 500 futures. The symbol with is ESH19, and as you can see right now, I am using a couple of time frames. The one on the top is a 2-minute time frame chart. The one in the bottom is a 15-minute chart time frame. Okay, good. So I'm gonna come back to this, and we're gonna talk about it for the traders in the room that are new to our get-together sessions. So I'll do a little bit of rephrasing on what's going to happen today, what we're going to do today, how the methodology will work. We're going to be playing with two different methodologies. If you look at the bottom part of my screen, I have a tab called UFOs EMA Lab, and the next one on the left for FIBO Lab. So we're going to be looking at applications intraday trading purposes, where we're going to be combining the AutoUFOs with either moving averages or Fibonacci's, and the reason to do that is just, well, multiple reasons, but quick summary. You could certainly use AutoUFOs on their own, but at the same time, there may be many UFOs on your computer screen, on your charts, and therefore one way on how to filter some UFOs and focus on only a few of them, which are the key ones, could be to use either moving averages and Fibonacci retracement lines or Fibonacci projections. And the reason why I'm mentioning that is because the idea that we pursue when we are together in our sessions not only is to find a few trades and execute them, but doing so in a way that is mechanical, that is robust and does not imply any sort of subjectivity. And the beauty of computers is that when computers do any sort of mathematical calculation for us, and Fibonacci ratios are a calculation, just like moving averages are a calculation. So when you add mathematical calculations on top of UFOs, basically what you have done is to remove the human component, and therefore that will make you more consistent on your action because there is no subjectivity. And if your action is consistent, then your results should be consistent too. Instead of acting subjectively, acting based on a subjective analysis of the market, which will have you act in a random fashion. And if you were to act in a random fashion, well, probably your results will be random too. So the idea here is to kill many birds by throwing one stone. And not only we're going to learn how to use the app in this session, but we're going to surround the app, the AutoUFOs app, we're going to surround it with a collection of possible rules for you to decide which ones you want to use and end up with your business plan, your trading plan, with a collection of rules that will be helping you to be a more efficient trader by becoming more mechanical and more professional and disciplined on executing those tools as well, those rules as well. Okay, that's the idea. Okay, so a quick summary here to begin the day. Now, before we begin into the planning of the trades themselves, what I'm gonna do is change a screen just to give a few extra instructions we always do when we start the session. First of all, I'd like to point at our website, www.tradewithufos.com. I will also share this on your screen so you can take a note. Why is it important that you are aware of this website? Well, not only because it's our website and it's very cool, but also most importantly because there is a lot of information here that will help you to be more efficient using the app. One of the sections I always point at is the guide. There is a guide section on our website where you can either download the app guide in PDF format, and you can just go ahead and read the manual like you would do with any other tool. Even though many people don't really enjoy spending time reading a guide and they prefer watching either instructional videos or some sort of supporting material in the form of a video. So guess what? Good news. In the guide section, we have a collection of YouTube videos that explains how to use the app, like you were reading the manual, but without having to read the manual. Okay, so our recommendation is obviously that you do both. You watch the videos and you read the manual. You decide which sequence works best for you, but just know all that information is available on the guide section of our website. The other very important part on our website, I would recommend everybody to explore all sections of the website, but there is another very important section on our website, which is what we call the get together, which is probably how you ended up in the session with us today. But in case you're watching this recorded, just know there is a get together session here, a get together section, I meant to say, where in this section, you will have a full understanding of the future dates that we have already scheduled, where we will be getting together to trade together, to look at market opportunities together, to get to understand the use of the app, together, etc. And you can also see in this schedule the type of session that we'll be running. For example, today, January 15, we're doing short term. Tomorrow, we'll get back together to do longer term. Okay, so it's important that you know this is where you find the information. If you have missed some of the sessions, or you want to catch up, or you want to watch the session, there is a YouTube link that will bring you to a playlist with all the prior sessions that we have done before. And if you have never done any live get-together session with us, make sure you fill in this table. So you click join online session with your personal contact information, and that will be able to connect with you and to send you a special link that you need to use to be connected live, okay, because you may be watching this recorded. Another website I would like to remind you very quickly is our social media pages, and there are many social media platforms out there. The two I would like to mention is Facebook and also LinkedIn. in case you are not a fan of Facebook, okay? Because different people may develop different preferences when it comes to the social media pages that you like to use. In this case, they both have the same content. Both in LinkedIn and Facebook, we are sharing many trade examples that are examples from our users. Okay, for example, today, a Forex trade was shared, a Forex trade where the trader was following a trend, was getting into a trending market and entering, and the timing of the trade, the when to get in, the when to get out, was identified thanks to the AutoUFOs. Okay, so by looking at all those different examples that you will see in our social media pages, this could really help you to understand better and not only how to use our app, but actually maybe you even pick up, you even may develop some new thoughts or new ideas just by observing other traders on how they do it. And hopefully this could help you to develop an even better trading plan for yourself. Okay. One more, and we'll get back to TradeStation. Okay. And the one more page, the one more website I would like to visit with you guys is the TradeStation Trading App Store. Of course, for you to have access to the app, you need to have it activated within your TradeStation platform. And how do you do that? Well, it's very simple. You connect with actually there is no W. You connect with tradestation.tradingappstore.com, and the moment you have connected with the website, you just type UFOs on the search box. You click on the green button for search, and it will give you access to the AutoUFOs app. So what do you do at this point? Well, you just subscribe. Okay, either subscribe in a way that is long-lasting, so you have a payment of $89 a month, or if you just want to test drive the app, you just click on the free trial, and then you can enjoy the app in your TradeStation platform during a few days. Okay, and then you can evaluate if you would like to subscribe for longer-term use of the app, or you're not interested. Anyway, so we have done all of this. Okay, and now we are back to TradeStation. Okay, so again, let's take a look at the markets. Okay, let's look at market opportunities. We have like a little more than 15 minutes in front of us before the US markets open. It doesn't mean that you have to trade at this time. You could actually use the app anytime. You could trade anytime during when you trade Forex and futures, which are 24-hour markets. But really, when the U.S. markets, when the equity markets open, normally this will inject a peak of speed in price movement, and normally this helps us to make a little more money a little faster. And normally, intraday traders, we appreciate that. Okay, so a great time to do the trading, even though you could certainly do it at different times in the day. So what are we planning to do? Well, we are planning to catch a trade around the market open, either with the S&P, with the Nasdaq. These are the two markets I would like to focus on when it comes to equities, the S&P and the Nasdaq. Is $50 a point, which is a nice point value. Why the Nasdaq? Because the Nasdaq is $20 a point, which is a little less point value, So, if your account size is lesser, maybe you go for the Nasdaq. If your account size is a little more, maybe you go for the S&P. You could certainly trade other markets too, like the Dow Jones futures, the Russell futures, but I will leave those for another day. Okay, I will focus on the S&P and the Nasdaq today, if that's okay. And then, apart from the equity market, I will also like to look at a couple of key currencies. So we look at the euro, we'll look at the pound, we'll look at the yen. We'll look at a few currencies that are key, and hopefully we can plan a few trades. I would like to do this, combining those moving averages with the app. I would like to do this, combining the fibs with the app. And I would like to do that with a couple of collections of different time frames. So I give you choices on how active you make yourself or how less active you want to make yourself. Let me explain this better. So if I take a trade with the S&P using a 2-minute time frame, basically I'm gonna make my trade to last less time compared to if I was to take a trade using, let's say, for example, the 30-minute time frame. If I use the 30-minute time frame, my trade will last more because every candle last 30 minutes. If I take a trade with the 2 minutes, my trade will last less because every candle is only 2 minutes. So this is a matter of personal preference, you as a trader. Depending on the trading style that you like to perform, some people like to be quick in and out and trade very, very quickly. Some people like to trade in a way that is a little more relaxed. So and therefore they like their trades to move a little, to last a little longer. So I'm gonna be giving you choices for all of you. So you can experience different trading styles if you haven't yet, and we can also identify different market opportunities. Okay, and of course, as we do all of this together, sometimes the market will be more generous to us, and we'll have more trades and we'll make more money. And sometimes the market will be less generous. Sometimes there are days where the market is really a little bit in the boring side, and sometimes we will get very few trades or even none. It could happen. It's not common, but it could happen. So we'll do whatever is possible, and we'll do it together. And as I prepare those trades, I will be sharing, what is going through my mind, so you get to understand my thinking behind the scenes while I'm planning the trades, so you can develop the same thinking process for yourself. If you have any question, please interact using the comment box, and we can be properly connected. Okay. Okay. Yeah. Arpad, I see your message there. We'll check later on. Okay. Thank you so much. Good. So anyway, so let's go for it. So let's begin with the S&P, and let's begin with what we have on the screen, which is two charts representing the 15-minute time frame below, the 2-minute time frame above. The one below, we will use it simply for the purpose of, and the one above, we will use it simply for the purpose to have the UFOs. So let me maximize the 15-minute time frame so you have a better view of the whole chart. Okay, and let me actually zoom out. Oh, sorry guys, I just want to be able to quick here. Here we go. So I'm zooming out. Oh, sorry, something's happening here with my keyboard. Okay. Okay, so take a look at the chart below, which is the 15-minute time frame. Okay, what do I have in here? I have an exponential moving average, which if I double click on it and you see the inputs, it's just the one that comes by default with TradeStation. Okay, no need to get very original here. It's a 9 exponential moving average, and I mean, the reason why we're using that is because computers, which obviously markets are electronic, so computers trade, and many of the computers that are programmed to trade automatically out there in the world, they often use moving averages to have certain trading decisions. Okay, sometimes it's very obvious. You can see how in places like here, the candles hit the average and move in the opposite direction, or here is even more obvious. Okay, now it's not always the case, but many times price will come close to one of those key averages and price will move away from it. Why? Because many computers around the world will inject orders in the market. So in other words, what is the relevance of these moving averages, this moving average for me as I planned trade number 1 for the day? Well, the relevance is that this moving average may represent 2 things for me that add probabilities in my favor. The first thing is new on-field orders entering the market. Why did I say that? Well, because I know, thanks to my AutoUFOs app, which I am running on my 2-minute time frame, thanks to my 2-minute time frame AutoUFOs chart, I know where the on-field orders are in the market, on-field orders to buy, on-field orders to sell. I know that, right? But what I'm trying to find out with the moving average as well is not only where I already have on-field orders in the market, I am also trying to find out where I may have additional on-field orders being added to the marketplace, which are on-field orders that have not been added yet. Okay, so the moving average represents that. The moving average may imply new orders coming into the market that have not been in the market yet. Again, when I say may, obviously, I'm not talking about a certainty, but obviously, when I say may, I am talking about a potential for a higher probability of success. Why? Because if my AutoUFOs app identifies on-field orders, and on top of the on-field orders already available in the market, on top of that, I got more on-field orders entering the market after I enter the trade myself, well, that is likely to help for the market to continue moving towards my target. Okay, so again, it's about probabilities in trading, and therefore we like the concept of having a little extra help that potentially could kick in after you enter your trades. So the moving average is doing this for us, and this is one of the reasons why I have it on the screen. What is the other reason? Well, the other reason why we have it on the screen is because the moving average represents or plots the average price movement. And if the average price movement shows you a movement to the upside, in other words, you can see a line with an angle pointing up, or you see a line with an angle pointing down, this is telling you that the average price movement is moving in that particular direction. In other words, the moving averages show you the trend. And the trend is happening because of one reason, right? And we actually did, if you haven't watched it, I recommend you to watch it. On January 6th, we did a sharpening session on trend, and we talked about one of the things that we said is that the trend is not magic or anything like that. Actually, the trend is not even relevant unless there is room for the trend to continue expanding. If there is room for the trend to continue expanding, then the trend is relevant, and the trend may represent extra odds of success. Why? Because for a market, for example, this market, this moment in time is going down. So the trend is down. So when this market was going down, why is that? Well, the reason why it's going down is because there is more selling than buying. And how do you end up with more selling than buying? Well, not only because there is a lot of selling, but also because the buy on-field orders are being removed. Field orders to buy are being canceled. The buy on-field orders are being removed. So why is this important? Well, because in a trending market where there is still room for the market to continue trending, which you know that thanks to the UFOs, as we covered on January 6th, and you can go ahead and review that session if you were not live with us that day. Well, that would act again as another odds of success, additional odds in your favor in order for you to be successful as a trader. So if you were to enter a market because you have UFOs and the trend is in your favor and there is room for the trend to keep expanding, meaning that the orders in the opposite direction of your trade are likely to be canceled and more orders of your nature are going to be added to the market, and the moving average represents potential on-field orders to be added after you enter the trade, well, you put it all together, and basically what I'm saying is that you are increasing your odds of success. Now, of course, there is no guarantee in trading. There is no sure thing. It's all about probabilities. But I think that we all agree that that would be a good beginning, that you start a trade having all those elements of the trade in your favor, instead of you start a trade where you only have one element in your favor and everything else is against you, right? So a very simple and mechanical way on how to assess what I just described is to have a small window in the bottom part of the screen where I'm using a 15-minute time frame in this case. Look at where the average is, and right now you can see the price is above the average, which means that we may be in a market situation where the trend that was going down, because for many candles price was below the average, which means that the average price movement was going down, but now price went above, right? So if you were to see this candle, okay, close in 6 minutes from now, if I'm not mistaken with the math, when this candle closes 6 minutes later, if that closing price is above the average, then we will conclude that the market is about to go up in an uptrend. And when you look at the 2-minute time frame, take a look at this. When you look at the 2-minute time frame, take a look at this. There is no red UFO in front of us. All the UFOs are green, which is kind of supporting what I just said. Okay, you got buy on-field orders in the market, and you have no sell on-field orders in the market. So it seems that this market is positioning itself to begin moving higher. And if that's the case, the idea in the back of my mind would be, I would like to find an opportunity So I can join this potential trend that has not developed yet, join it from a pretty early stage, so I can ride most of it and end up with a nice profit. Okay. Now, again, that's what we have now, but I cannot take this trade now because I need to wait for this candle to close below the one in the 15-minute time frame. So I have the confirmation, more than confirmation, really, that's not the right word I should use. What I meant to say is I don't want to trade based on an impression that it looks like the candle is above, because even though it looks like it's above because it's above now, it may close below then. So instead of guessing it's going to close above or below, I don't want to guess. I want to be mechanical, and therefore the only way for me to be mechanical is to be disciplined and wait 5 more minutes until the candle closes. And then it's going to be a black or white type of decision. If the candle closed above, then it's above, and if the candle closes below, then it's below. And I don't need to guess. I don't need to have a preference or a priority or a bias or anything like that. You just act based on what I have, and that's it. So I'm going to have to wait 5 more minutes here with the S&P. Okay, so instead of waiting and just watching the screen and doing nothing, so I think I'm going to move to the NASDAQ. So I'm going to change symbol to NQH19. And as I type NQH19, NQ for NASDAQ future, H, it's for the March contract, 19 for 2019. Well, in this case, we have a little bit of a different picture because the NASDAQ does show us sell on-field orders above. Okay, so that is less good in the sense that if this market is going to move up, there are actually forces available to stop it going higher and start moving lower. Okay, not necessarily a bad thing as long as those forces away enough so we can have a profit which is good enough before the market turns and starts moving lower out of those red UFOs. Okay, but you know, definitely the S&P, if I go back to ESH19, the S&P is looking like, because of the lack of red UFOs, has a greater presents us with a greater possibility, a greater opportunity when it comes to making a much larger profit. Okay, but again, I cannot conclude that yet. I need to wait 4 more minutes, okay, to conclude that. Okay, so coming back to the NASDAQ, if I look at the prior candle here, so the prior candle in the 15-minute time frame had a close at 65.72, where the average was 65.71.8. So technically speaking, talking about being mechanical and having a black or white type of decision, the NASDAQ had a close above the average already. So 15 minutes ago, actually 25 minutes ago, this candle closed above the average. The NASDAQ is already in an uptrend. So with the NASDAQ, I am actually allowed to start planning on trades to go long the NASDAQ, okay, using the green UFOs, okay? But I'm not going to take those trades unless the green UFOs coincide with the average. Because remember, I want to use the average not only as a mechanical way to assess the trending condition available at this moment in time, I also want to use the moving averages as a tool to enhance my odds of success by representing extra orders coming into the market after I got into the market myself, okay? And right now, the average is 55.73.1. So if I was to add a line around 55.73, that would be more or less here. So notice how the moving average is basically lining up with the green UFO, okay? So in other words, if this market comes to this price point, it seems to me, based on the rationale I explained before, that it would not be a crazy thing. It would not be a crazy thing to take a trade to the long side, expecting a bounce out of this green UFO, because we're in an uptrending condition, because we got on-field orders to buy identified by the AutoUFOs app, and on top of that, we have potential for more on-field orders to kick in after we enter the trade because of the moving average, and being the fact that the moving average is in the same location as our entry, those on-field orders will enter after we enter. Okay, and the only way to profit is to have more people buy after you bought, or have more people sell after you sold, which is exactly what we have in front of us. So looking good, okay? Looking good for an entry, okay? The thing that doesn't make me very happy about this trade is the fact that, the next red UFO, it's a little too close, okay? It's a little too close here. And the white space between the UFOs is basically my room for profit, okay? So that doesn't make me very happy. I would rather be in a situation like the S&P earlier where I got nothing in between. That would be much better. But unfortunately, that's not what we have. Okay, so let me take the trade anyway. So I'm just gonna place an order here. I need to change the symbol on my red screen. Okay, red screen, NQH19. Here we go. So we're talking about an entry around 65.73. So I'm using two contracts here. So I'm going to use a exit bracket, 2 limits, 1 stop. So 65.73, it's a little lower. So I'm going to have to move my red screen a little lower. So, sorry, not my red screen, my matrix, I meant a little lower. I'm just going to click here. Here we go. And the moment I click, this would place the order in the system for me. Okay, so now my stop needs to be below the green box. Below the green box is 68.75, so I'll make it 68.25. Here we go. So that's going to be the location for my stop. So I have the entry stop, and now I need my targets. Okay, so my further target, I'm not gonna use this red UFO for my further target. I'm going to use the next one. The reason why is because this one is light red, which means that price is more likely to go through, even though it's there. But price is more likely to go through. You can see the reaction to the unfilled orders in their circle. So, I mean, it's there, but at the same time, because I'm going to have a prior target to that, so I'm going to make my ultimate target to be 65.89. Okay, by the way, we just got good news because this UFO just went away, isn't it? Because price traded too much in it, so the remaining unfilled orders are now assumed to be gone. Okay, so I'm gonna move my ultimate target to be 89.5. Okay, so this is gonna be my ultimate target. Okay, right there, and then my target one right here, which is my limit order L1, that one, I'm just going to use a mechanical one-to-one type of calculation just to remove the risk of the trade. Okay, that's the plan. Okay, so again, I am waiting for these to go back down. When it comes to the green UFO, I will buy at 65.73. My stop, let me bring a calculator here. I'm doing this very slowly for you to have time to replicate yourself as well. So 65.73 minus 68.25. We're talking about 4.75 points of risk. So if I add this on top of 73, that would bring my target one at 77.75. Okay, so I'm just gonna move down and move that 65.75. I'm gonna move it up to 77.75. So simple to do. Just drag it. Okay, I'm just gonna drag it right there. Here we go. So that would be my mechanical entry at 73, my stop at 68.25, mechanical target one, safety target 77.75. If you unload half of your position at 1-to-1, if you unload half of your position at 1-to-1, that means that even if you get stopped out with the remaining half of the position where your stop is, you could not lose anymore. Okay, because you have already taken half of the profit. Okay, so that's the plan. And in the meantime, as I was explaining all of this, a few things have happened. The market started moving in a strongly fashion and got rid of the remaining UFO that was on the screen. So what does that mean? That's a good news. Now the setup with the S&P and the Nasdaq in both cases looks the same. We got nothing overhead to stop this trend to potentially continue moving higher, and we may have a pretty strong update in the equity markets in the US. Okay, so again, this reinforces what I just said when it comes to taking this trade. Okay, now one more observation as we speak, and this is happening, so you know how to act when you're doing this on your own. Especially when we have a day like today, market is moving quite fast at the beginning. Okay, we normally have fast movement at the beginning, right at the open, but right now, which the market just opened 5 minutes ago, we already moved up by 0.9%. So that's a pretty strong day. Okay, so what's going to happen? Well, let me anticipate a little bit of the future here, if you wish. When you have a very strong day like that, the problem is that we were waiting to buy down here, but it's not coming back. So in one hand, it may make you feel that you are missing on the move. Okay, and again, we all know that trading is a very psychological game, and many times, we may get overthinking about it, and we may feel like, oh my God, should I get in now? Should I chase it? Of course, being disciplined is the way to do it. So everybody remain under control of our own mindsets. Is that making sense? So what we're gonna do is just relax, okay, and know that the good news is that even though the whole move happened and it seems that we are missing the move, the good news is that in 9 minutes from now, the candle below will update in the 15-minute time frame. And the moment the candle below updates, not only the candle will update, but also the moving average, right? And notice what happened to the moving average. The moving average in the prior candle was around 73, where the moving average as we speak is around 91, right? Around 91. If I'm not mistaken, is it 91 or 81? Sorry, 81. Around 81. So what's going to happen? Well, when this candle closes, okay, we'll have a new calculation for the moving average, okay, and maybe this green UFO will be our entry instead of the one below. Okay, so we're just going to be reactive. Okay, and by the way, we have a perfect example of what I explained earlier when I told you that in a trending market, often on-field orders are removed. So what needs to happen for the trend to continue going higher? The sell on-field orders, the red UFOs, those orders are often removed. So that's why I am adding more odds in my favor by combining the moving average together with the UFOs instead of using the UFOs on their own, which you could. But in this case, if you had shorted just because of the UFO without understanding the market condition that was an uptrend, you may have got stopped out. And the reason why you got stopped out is because the remaining on-field orders have been canceled. And you don't know that until it happens, isn't it? So one way to avoid getting yourself in trouble this way is to use a moving average the way I just explained, which is a very simple thing to be done, but as you can see, quite efficient. Because at this moment in time, in this trading day, we haven't got into any trade, but we have not got any losses either. Okay, given the fact that if you had shorted, you had a 1.17% move against you, that could have been quite painful. So we are in the safe side, and now we are playing the waiting game, which is part of trading. So anyway, I will come back to the NASDAQ chart in a couple of minutes to see when that, well, actually a little more than a couple of minutes, in 7 minutes or so, to see how this lower moving average has updated and replan my trades accordingly. Everybody with me on everything I'm saying here? I can see a few comments. Let me get your questions before I go for the next markets. So I got Orlando. Where do you see how long before the candle closes? Well, Orlando, looking at my clock, since I know the time frame is 15, I know the closes will take place at 15, 30, 45, and 00 in my clock. So I was watching my watch, and that's how I did the math in my head. Is that making sense? There is an indicator in TradeStation where TradeStation can do the math for you and plot it on the screen. Okay, but I was just doing it manually, old school. So why would you have looked at the shorts? Is this because your moving average on the 15 was above? No, well, in this case, I was only looking for a long trade because the close was above the moving average. Okay, so I was looking for a long, not for a short. So I was not in this particular example with these particular timeframes. Next question with Orlando. How about to trade the breakout to the upside? We could certainly do that too. But if that's okay, Orlando, let's talk about it another day because I have plans to talk about them. And if I add the breakout, we will run out of time. So maybe what we could do is to talk about breakouts another day. Maybe we can use a sharpening session day to do that. That would be a great. I love your suggestion, and we can certainly do that because definitely in a very strong day like we had today, right at the open, you may miss the initial move. Okay, and maybe if your trading style is very much in the aggressive side, and you don't want to miss the initial move. A breakout could be the recipe on how to fix that problem, but also breakouts often become fake outs unless you treat it properly. So we can certainly talk about that. Okay, let's do it another day. If the car, okay, you have answered my question. Oh, got it. Perfect. I see that. Let me see. Milan, can you go over moving averages again? How does it align with the green UFO? Yeah. So basically what I want to do, for example, in that screen right now, I got two green UFOs below price. Okay, the one here around 65.80 and the one below around 65.73. Okay, I got two green UFOs. So one question that we need to answer to ourselves as traders is, so which one should I take? Should I take one? Should I take both? Should I take the one above? Should I take the one below? Okay, or should I take none? So you need to select out of all the UFOs available, which ones represent a higher quality, a higher probability, and discard the rest. Okay, because I mean, you could certainly trade them all, but it would make you a better trader if you were more selective. Correct? Again, it's the difference between quality and quantity. Okay, so quality in trading means probability, right? And in this case, what we are doing with the moving average, Milan, it's very simple. We are simply looking at UFOs that are lining up with moving averages. Okay, so right now, if I put my mouse in the bottom screen, which is a 15-minute time frame, okay, which by the way, a 16-minute time frame is a standard time frame that millions of traders around the world use. Give me a second here, guys. Sometimes my computer runs a little slow when I'm streaming the video for you guys. It makes my computer to act a little slow, which is the case right now. Give me a sec. Okay, here we go. So when you look at the moving average here, the current price of the moving average is 6583.14. So the question is, do you have a green UFO at 6583, right? And 6583, if I add a horizontal line on the upper chart, okay, yeah, for whatever reason, the streaming video is really slowing down my computer now, so please bear with me. I see, Mark, your questions as well. I'll catch up with your questions right now as well, Mark. So if I add a line at 65.83, because it happens to be the price of the average, and remember, the average is also a price that may be traded by computers, and therefore it may represent additional orders kicking in the market after you got in. Well, notice how 65.83, which is the average, coincides with one of the green UFOs. So what does that tell you? Well, it tells you that we already have unfilled orders in the market waiting to get filled. We already know that thanks to the UFO, the run circles. But on top of that, now, thanks to the moving average, potentially, you may have computers buying even more than the unfilled orders already available. In other words, you may have more people buy after you bought. So what would you do? Well, you would ignore the lower UFO now, and you would trade the upper UFO. Okay, that's very simple. It's very simple, but it's quite powerful. Okay, and it may help you not only to be more selective, but also to be selective in a way that adds odds in your favor. Let me see, question here from Mark. So let me copy your question here on in the mainstream. So Mark says, So how close to the 9 EMA does the UFO have to be? Can it be inside the UFO? Yeah, the answer is yes. Okay, the answer is yes. And I recommend you, instead of, which is a very good question mark, instead of asking yourself the question, how close it has to be, again, to make ourselves mechanical, let's change the question and let's ask ourselves the question, is it inside or is it outside of the UFO, instead of is it close or far from the UFO? So the answer is black or white, yes or no. And if it's inside, you take the trade, and if it's outside, you pass. And by the way, look at what happened. As we speak, the bottom chart updated with a new candle. And what does it do? Well, it updated the average. And what is the new price of the average? Well, now it's 65.95. Okay, it's 65.95. This is the new value of the average. So what would happen if I draw a horizontal line on my upper chart around 65.95? Okay, so let's go for 65.95. Well, notice that this line is now in the middle of nowhere. There's nothing there. There is no UFO. So what am I going to do? Well, take a look. My mouse is moving to the right. I'm going to find the yellow box, cancel all. And what am I doing? I am canceling this trade. Why am I canceling the trade? Because this trade does not represent anymore what I said before. What I said before is that this trade was representing an opportunity to buy in an uptrend with unfilled orders in an uptrend that was likely to continue expanding, where you, on top of that, you had potential for new unfilled orders to kick in after you bought. This setup is not available anymore. Why? Because we had such a strong move at the beginning of the day, which someday may be like that. So this opportunity is not available, and mechanically, with discipline, I just canceled the order. That's it. So what do you do now? Simple. Look for another market. Let's move to the S&P. Okay, and I know you have another question mark. I'll take care of that in just a second. So what do we have here? Well, the S&P has the average at 88. So what is 88? 88 is there. Okay, so we are outside the green UFO. Okay, we are outside the green UFO. So what do? You pass. You don't take the trade. Let me add one more thing here, because I'm going to make an exception. Okay, and you will see why I make an exception. I'm not going to break the rules, but I'm going to give you an extra rule to make an exception. Notice what happens as the market moves. The moving average, which is currently trading at 25.88, is trading at 25.88, 0.68, 0.63, 0.68, 0.73, 0.78, 0.83. Notice how the average is moving as the price is moving. So what's going to happen to the average if the market goes down? Well, if the market goes down, the average is going to move down. Right now it's pointing at 88, which is above the green UFO. Okay, but notice it's just a little bit. So remember, I said it doesn't matter if it's a little bit or a lot. The question is it inside or outside? Right now it's outside. But what am I expecting to happen here? What I'm expecting to happen is that if the market goes down, because there is a lot of distance from here to here, and this is just coming out of experience, what's going to happen is that the moving average should be impacted quite greatly. And this moving average may drop to, I don't know, 25.87. And that is within the UFO. Okay? So what could you do? Well, you could do two things. You could just wait to see what happens and act on whatever happens. But as a trader, because canceling an order is faster than placing an order, what I like to do for myself, and here's a suggestion out there, in case you find it useful for yourself. As a trader, I prefer not knowing that I expect the moving average to go down and line up with the UFO. If the market goes back down to where the green UFO is, which is the place where to buy, well then, knowing that canceling an order takes no time, where placing an order takes a little time, I'm going to place an order, and watch this market. And if this market is approaching and gets to the green UFO, and I see it's very close, and I see the moving average is still outside, right? Then I will cancel the order. But based on experience, I would guess that when this market hits the green UFO, then the moving average would be within the green UFO, just because the average is a mathematical calculation based on the average price. And if the price goes down, then the average price goes down too. Okay, everybody, would you mind to just just type a quick "I got it" on the comment box, and that way, I know that you follow this little rationale, because I like to give you rules that are black or white type of rules, yes or no type of rules, but at the same time, sometimes trading is a little more complex than that, isn't it? And therefore I need to add a little extra information here. So that's what I did, and I want to make sure no one got confused with what I said. So I'm just gonna re-add the S&P here, ESH19, and I'm gonna look at 2587.25. So 87.25, again, same story. I got two contracts. I got a bracket order with two targets. So I'm looking for the 87.25. And I'm just going to click buy. I think, yeah, correct. I did click in the right place. 87.25. Now I'm going to rectify my stop to be 83.75. Sorry, 80.5, right? Very good. So now same story. If I do the math from 87.25 to 83.25, well, that's silly math. It's 4 points. It was very simple. So 4 points on top of 87.25. That's going to bring my target one up to 91.25. So let's move my first target to 91.25. That's going to be my first target. Okay, that's my mechanical 1-to-1, as I said before. And now my target 2, that one is going to be located much further. Okay, so let me maximize the screen to see how further I want it to be, because, of course, I want it to be wherever there is a red UFO. And in this time frame, I got none. What if I zoom out? No red UFOs in this time frame. So I'm going to go for the next one, 5-minute time frame. No red UFOs. 15-minute time frame. No red UFO. 30-minute time frame. I just keep adding time frames. Here we go. So the next UFO available is right here, okay, which is 2621.5. Okay, that's, my friends, that's a very large profit margin. I love it. But just keep in mind that this may not make you an intraday trader. That may imply you have to carry the trade overnight, unless the market keeps moving very, very strong. Okay, so I would go as far as saying that I don't feel this target to be a valid target, given the fact that we're planning on intraday trading. Okay, we're talking about a lot of room to go from current price all the way here, and we get there. Notice that even this red UFO that was located in a 30-minute time frame, that guy is being traded through. Okay, which means that many of the sell-on field orders are being removed, which is telling you the trend is likely to continue. But again, we are doing short-term trading today, and if I keep my target all the way to 26.22, really, this is going to take probably, let's call it a couple of days to get there. So I'm going to keep loading time frames. Here we go. In the 60-minute time frame, I do identify a nearer UFO. Okay, right there. So I would take profits before that, which is 26.12. Still huge. And I'm going to look one more time from the 4-hour time frame. And with the 4-hour time frame, let me see what we have here. Yeah, so I can move my line just a little lower. Okay, so here we go. So 26.11.69. So 26.11.5. So this could be a very, very powerful trade. Just make sure you understand that because of purely distance to 2611.5, which is the target I just commented, just because of purely distance, just keep in mind that this may be a trade that you have to hold overnight, and just make sure you understand the margin requirements for that, so you don't get a margin call or anything like that. Okay, if you haven't got to this target before the end of the day, which I would say is unlikely just because of how far it is, I would recommend you guys to, if you want to make sure your trade is not held overnight, just before the closing time of the market, you just go ahead and you close it manually. Okay, maybe you can do that too. But just to be purely mechanical, okay, purely mechanical, and to be honest, once we reach the 1-to-1, we remove the risk of the trade. So there is no risk. The only risk available is margin risk, if you wish. So I'm just gonna, let me move this manually like that. I'm just gonna let the trade happen, and if we get to 2611, we'll be very happy, because there is potential for this to happen based on the prior conditions of the trade. Okay, so we said 1125. I'm just moving it very slowly for you guys, so you see the process of dragging the prices on the matrix. So let me go back to the 2-minute time frame here on the left. Here we go. So here is our trade. Okay? So we are planning to enter here, which is green UFO lining up with the moving average. We need to watch for that because right now it's not exactly lining up. And the target is, as you can see, much further away. But definitely we are not doing anything crazy here. We are actually doing something, I would call it quite smart, even though I may not sound very modest if I say that, but that's exactly how I feel about this trade. So, good. Now, a quick look at the clock. 3 minutes from now, this bottom candle will close, and therefore the moving average will update. So we'll come back in 3 minutes to double check if this average is still likely looking to line up with the green UFO, or it's not the case. Okay. In the meantime, I would like to at least once take a look at the fib workspace as well. So maybe we can play a little bit with the fibs here. So let me deactivate the UFOs here. Okay. And I will activate the UFOs in the Fibo lab. Since I have a trade with the S&P, let's move to the Nasdaq. So, or you know what? Let's plan a trade with fibs with the currencies. So, for example, let's look at the euro. I'll do. We will exceed the ending time of the session by a little bit, guys. In theory, we are supposed to be here for 1 hour, so we'll be just a little more than 1 hour. And Mark, I haven't forgotten your questions. Arpad, I see your questions too. Everybody, guys, I see you. Okay, so I'm with you. I just want to at least expose you to at least one time, to using the FIPS to open your mind. And we'll talk more about all of these little by little as we spend time together, and also with the sharpening sessions that we'll do over the weekends. Okay, guys? So here we go. We got the 5-minute time from here. And remember, we did it once very quickly, but when you look at FIB stuff, the idea is to look at really obvious things, right? Really obvious things. If I load this chart, I think that we probably all agree that this high is very obvious, just like this very low down there is also very obvious. So what am I going to do? I'm going to start from top to bottom. Since the directional movement is from up to down, I'm just going to draw all those lines. Here we go. And just like I've done it towards the downside, okay, going down, I'm also going to do the same going up. Okay, so I'm going to click from the bottom part to where the current price is. Okay, and that one is tricky because the current price is here now, but the current price may move. Okay, so it's much more comfortable to do it when, in this case, let's say the euro has already started, kind of going down. For example, if the euro was to move down, let me make this black. If the euro was to go down like that, okay, and the euro was to enter the green UFO, okay, well, then that would be the high, correct? And that would be the low of this upper move. So you have the obvious high, and then you have all the fibs, right? And from here, the high to the low, you have the obvious high, and then projecting to the downside to the obvious low, and then in the middle, you have the fibs. And then basically what you would do is to trade the UFOs with the greatest amount of fib lines coinciding with them. In this case, you can see I got one fib here and one fib there. Those two fibs are lining up with the green UFO, which means that many computers, many traders around the world, because of fibs, they may buy at this price. And we have on-field orders to buy that we know thanks to our app. So what do? Well, you may want to take the trade using this green UFO and you ignore everything else. Why do you ignore everything else? Because the green UFO below only have one fib. Why do you ignore those red UFOs too? Well, because they only have one fib as well. So what would be the best trade now? The better trade now would be that green UFO. Why? Because you have two fibs within the UFO, which potentially increases the probability of new on-field orders to enter the market after you have entered the market yourself. Okay, fibs are not magic, but they may imply new orders entering the market. So that is useful if you are in the trade already. Is that making sense? So that could be the case. Now, in this case, you just need to wait to see if the euro is going to go down or not, because if the euro keeps going higher, then this is not going to be the obvious high. And maybe if the euro was to keep going higher, say the euro was to keep going higher to here, and then the euro from here was to go ahead and drop to the green UFO, right? So then you will need to take this Fibonacci line, which I set up right there where the peak was, okay? And if the peak is here now, but will not be there in the future, and the peak in the future is going to be here, well, then you would move your upper Fibonacci tool to this point. And in this case, it's just a coincidence, but notice how this green UFO is still a valid UFO to trade because you still have the two fibs lining up with the green UFO. Okay, you would still ignore the one below because you got no fib, and you will also ignore those red UFOs because you only have one fib lining up with the UFO where the green one here got two. So from a Fibonacci point of view, from a point of view of having new on-field orders enter the market after you enter the market yourself, you would have a little bit of a higher probability, okay? But anyway, because a matter of time available for the session today, that's all I'm going to say. And you may want to practice and experience a little bit with this concept yourself. You can watch this recorded later so you can listen to it again. And then in the future sessions when we'll talk about that, probably if you do a little bit of homework or a little practice on your own, maybe you will have a bunch of questions to ask that will also help you to clarify. Okay, so let's go back to the prior trade that we had with the S&P futures. So I'm moving back to the workspace with the moving averages. The moving averages now is lining up. Let me reactivate, sorry guys, reactivate the UFOs. The moving average below, as you can see, has been recalculated. Why? Because we had a new candle. And my friends, this is one of these days, okay? The market just keep going. So it seems that today we will complete our session, and we will not have executed a trade, unfortunately, which of course is part of trading too. Okay, guys, just give me a second. Sometimes I have a little bit of delay in reaction of my computer screen because of the because of streaming the video. Here we go. Okay, so I'm reactivating the UFO. And notice how the purple line, actually now it's quite visual too. The purple line is currently trading higher than before because the market went higher. So it's 25.91. So 25.91 is all the way here, okay, where my cursor is. So basically the moving average is now lining up with my target one. So this is not looking good, guys. Not looking good for us to be able to execute this trade, in the sense that because the market keeps moving higher and the average is obviously following price, we are not having an opportunity up to this point to have a green UFO lining up with the average. Okay, so what would you need to do? Well, it's very simple. You would just need to be patient and wait. I'm just going to cancel those orders. Okay, you will need to be patient and wait, and who knows? Maybe 30 minutes from now, you do have the setup that we need. Okay, the market did went lower, a new green UFO has formed, and then you can take care of that trade. At the moment, unfortunately, it's not the case, and the market is really moving very strong, because I was telling you that reaching 26.11 was probably going to take more than one day, and notice how we are already trading at 26.05. So this is one of those days. Okay, good. Okay, before we conclude the session, I have a few more questions from Mark. So Mark says, so what if you don't have a large enough account to take two contracts? Well, if you cannot do that, then you have to go with one and only have one target, which has pros and cons. Definitely more disadvantages than advantages, that's for sure. Or you may want to explore other contracts, other markets that have a lesser margin requirement. Okay, a lesser margin requirement. So if you look at the TradeStation website, okay, if you look at tradestation.com, okay, come on, TradeStation. Okay, so this is interesting. The website is still loading. Okay, now, so TradeStation.com. So you look at a menu, you have a pricing. Inside the pricing, you can select futures. So again, little bit of slow speed on the refreshing of my screen with the video sharing, guys. I need to look into that. I'm sorry about the little delay today. You look at futures, you click on see details, and when you scroll down, actually you don't need to scroll down, you have it here, future margin rates. So when you look at the margin rates, you will be able to identify, for example, the S&P, you need 25% of $6,000 to be able to trade one contract. If that's too much, you may need to look at other contracts that require less money. Okay, and you just scroll down the list until you find that. For example, maybe if you trade, okay, the euro currency, you need 50% of 2,500. That's 1,200 more or less. That may be a little less than the S&P. I mean, just keep scrolling down. On the 5-year note is $800, and for intraday, you only need 50%. So now with $400 per contract, two contracts is 800. Now you can use two. So again, you would just need to make the markets that you trade to be compatible with your account size. Let me see, Arpad here. A question from Arpad as well. So let me share that on the screen. So Arpad said, we are at resistance or high on the curve. If you wish on the higher time frame, how to deal with that? Okay. Well, again, I think Arpad, it would be good that you look at the session that we did on trend that we did on January 6th. Okay, because being high or low, it's relative, and as long as there is still room for the trend to keep expanding, then it's not a problem. If you don't have room for the trend to keep expanding, then you need to plan on trading in the opposite direction. And on that session on January 6th, we talked about that a little bit. We'll talk further, but obviously today with the time, we will not have time to go into that, okay? But that's a very good question, okay? So make sure you watch that session if you haven't. Mark says, let me have this on the screen too. Mark says, I don't have the next red UFO on my chart. Are you using a different calibration than 0.5? I am using 0.5. Okay, 0.5. So if we use the same settings, we should have the same, unless you have corrupted data on your cache folder, or I have corrupted data on the cache folder. So from time to time, it's healthy for you to delete the cache folder of TradeStation to avoid corrupted data in case you have. Juan Carlos, our stop is inside a 15-minute green UFO. Very good point. Very good point. So what you said is that we were planning the trade using the 2-minute time frame, but then what happens is that if you were to look at the 15-minute time frame, then within the green UFO that was available in this. So what do? Well, one thing you could do is to move the stop below all of it. Okay. But at the same time, remember, to trade successfully implies finding a balance between the risk, the reward, and the probability. It's 3 things you need to balance out: the risk, the reward, and the probability. So for sure, you are 100% right, Juan Carlos. If you move your stop below the green UFO on the 15-minute time frame, you have a greater probability instead of having your stop within the green UFO. Even though it's below the green UFO in the 2-minute time frame, it is within the green UFO in the 15. So you are 100% right. But if you do that, you are hurting the reward to risk ratio of the trade. And because the rationale of the trade was to follow a trend and also rely on the average, not only on the UFO. So I think it's a much more balanced answer to leave it the way I suggested, instead of moving the stop below the green UFO in the 15-minute time frame, because again, you're right, you would increase your probability of not being stopped out, but you would hurt the reward to risk ratio relationship of your trades overall. And in trading, I would say that reward to risk ratio is more important than probability, even though it's all important, but it's about having a balance. So it all comes down to trading style and your personality. Okay, if you're a person who cannot stand taking a loss, you are very uncomfortable with the losses, then do that. But you know what's the sacrifice you need to make? You sacrifice the reward to risk ratio. If you're a person who you have developed a personality as a trader where you don't care about losses, you understand they are part of the game, and you appreciate when the losses are the smallest as possible, then just leave it the way I suggested, because it's good enough. Okay. Orlando, why not short now? Yeah, well, basically you have the same question as Arpad, so very good question, both of you, but we'll need to talk about that a different day. Okay. Good. Orlando, it broke third resistance structures on the way up. Does this confirm a change in the trend to the upside? Well, remember, trend, if you remember the session that we did on January 6th, trend means nothing. To understand trend, you need to start thinking that trend means nothing. That's one of the statements I made on that session, isn't it? And then, of course, I went way deeper, which I cannot repeat myself today because of lack of time. But basically, in the end, trend would be whatever is defined in your plan that you want trend to be. And in the plan I was using today on this trade, I was defining trend as a close above the average or a close below the average. So the moment the close happened above the average, no matter how many resistances were broken or not, you are in an uptrend. That's it. Is that making sense? That would be the assumption of the methodology or the plan that we exploited together today. Okay, so that's it. Could you have a different definition? Look at how many UFOs are broken, how many, certainly, 100% yes. Okay, but I'm always looking for this balance of simplicity as well as adding odds of success for you guys. Okay, so that was it. Okay. My pleasure, Mark, about the margin info. Yes, and clearing the cache folder is normally very useful. Yeah. Yeah, and again, I understand the shorting opportunity, but the way you would do that is that you would wait for the market to close below the average, and then you would wait for price to come to the red UFO lining up with the average. Okay, that's it. This is using the methodology I've been using today. Okay, guys, and that's what I want to help you do well in those sessions. Okay, I don't want to take every single trade available in the market, which there are many. Today, actually, I took none. What I want to do is to take trading opportunities that line up with a set of rules. Okay, and then, of course, we can work together on making the rules the best as possible. But the idea is to have a set of rules that lead us into which trades to take, instead of now you see a red UFOs 4 and suddenly you are trying to make up rules to take the trade. And I'm not saying this is what you're trying to do, Mark. I actually know this is not what you're trying to do, but at the same time, the temptation is there, especially if you are learning how to trade and you have limited experience. The temptation may be strong for you to see the red UFOs or the green UFOs forming in front of you, and suddenly you want to take a trade. And you could, because every UFO implies certain level of probability in your favor, but at the same time, if you take the trades with no rules around it, then as time passes, your trades will be, every trade you take will be for a different reason. And that is the opposite of consistency. Okay, so with consistent action to have consistent results. Okay, so today, what I'm trying to do in those get-together sessions, apart from, I mean, I'm trying to do many things, but one of the things I'm trying to do to help you guys is to help you put rules in place in a way that is structured, so you become more consistent in your action and therefore in your results. Very good. Milan, you said mine is showing 7 points higher than yours. Would you mind to say what it's showing 7 points higher than yours? I'm not sure what you mean by that. Yeah, absolutely, Orlando. Need a good set of rules to overrule initial rules used. Yeah, I mean, you need rules for everything, including if you need to break the rules, you need rules to break the rules, right? So in the end, it's basically every single possibility that could happen as you trade needs to be identified by a series of rules. And if the rules identify the opportunity, you take it. If the rules don't represent or identify the opportunity, then you have to stay, you have to do nothing. Oh, okay. So if your moving average, Milan, is higher than mine, it's because we are either using a different time frame, I'm using the 15, or you use a different symbol. Maybe you are using the of the ESH19, so make sure it's the same as me. You may be using a simple moving average while I'm using an exponential, so make sure you use an exponential, even though using a simple is right, but if you want your values to coincide with mine, just know I am using a average. Okay, and then my setting is 9, so make sure your setting is 9 as well. And also the way my average calculates, so make sure you are using the closing price too. If all of the above is true, we should have the same values. There's no reason why we would have a different value if everything I said, we have the same. Anyway, guys, it's been a pleasure. I extended the session by 20 minutes. Okay, so I mean, I love spending time in those get-together sessions with you guys, but at the same time, I want to be respectful of those times. Got it, perfect. So it was simple, very good, Milan. Thanks for confirming that. I was using exponential. Got it. No worries. Again, a pleasure, guys. I will see you tomorrow. Tomorrow, same time. Tomorrow we'll be doing longer term. So see you tomorrow, guys, and keep